Hello, and thanks everyone for joining this webinar about ISO 22301 and NIS2 and DORA business impact analysis. And yeah, just before I start with this webinar, just wait for maybe let's wait for maybe for a minute for everyone to join. And while we are waiting, just let me know where are you calling in from. I'm calling in from Zagreb, Croatia, and how about you? So let me know in a message in the Q&A pane or a chat message, just the city and the country where you're coming from, just for me to get a better feeling on where people are actually joining in and which people are interested, let's say, in this kind of a webinar. Okay, while I'm waiting for your inputs, just a couple of notes. First, we are recording this webinar, and you will be able to watch the recording on the same page where you registered. So if you join this webinar through Zoom, you will actually be able to watch the recording on the same page where you registered on 𝗹𝗲𝗴𝗶𝘀 website. If you joined through LinkedIn or through YouTube, then basically the recording will be on exactly the same page where you're watching the live webinar now. Second thing, you'll be able to download the presentation deck from this webinar, and at the end of the webinar I'll tell you exactly where to download and how to download the PDF presentation deck. Okay, I think we can start. So welcome to the webinar, how to use ISO 22301 business impact analysis for NIS2 and DORA. My name is 𝗪𝗏𝗏𝗁 and I'm the main ISO 27001 22301 NIS2 and DORA expert at 𝗹𝗲𝗴𝗲. And 𝗹𝗲𝗴𝗲 is a company that makes compliance easy to understand and simple to use. And this webinar today is streamed through Zoom, LinkedIn Live, and YouTube Live also, and it will last approximately 45 to 60 minutes, depending really on the number of questions you'll have. And yeah, I'll try to make this as interactive as possible, so that you can ask as many questions as you want. And by all means, please do ask questions even before the Q&A session, so during my presentation, so that I can give you some comments or give you some guidelines, and this will make the webinar much more interesting. Okay, I see that people are joining in from Sri Lanka, from Portugal. Great. Okay, thanks for letting me know. Great. So let's move on to the next slide. So basically, why is this topic of this BIA or business impact analysis important? Well, first of all, it's required by NIS2 and DORA, but there is a problem, and the problem is that really these two regulations do not really explain how to perform business impact analysis. I'll show you later on what exactly these regulations say, but the point is, again, business impact analysis is required, but there is no, let's say, definition on how this needs to be done. And so what I'll show you in today's webinar are basically how to perform, what are the steps needed for business impact analysis according to ISO 22301, the business continuity standard, and how to fit those results into NIS2 and DORA compliance. And yeah, the webinar today is basically intended for business continuity, cybersecurity professionals that are in charge of NIS2 and DORA compliance. Good. So one of my main points today is really that this standards, international standards, ISO 22301, which is the leading international standard for business continuity, is, I would say, the best way to actually implement not only business impact analysis, but the whole business continuity according to NIS2 and DORA. Because it's not only the problem with BIA, the business impact analysis, the problem is also with business continuity planning, business continuity strategy, business continuity policy. All of these things, they're required by these regulations, but again, they don't basically give you a guide or a clue on how this needs to be done. So 22301 is, I would say, a very good way to do it. And just to actually share you my screen, so here on the screen now you can actually see a LinkedIn poll that I posted like a week ago. And the poll question was, is ISO 22301 useful when performing a business impact analysis when complying with the DORA and NIS2? And as you can see, 83% of the replies say yes. So basically, obviously, there is a kind of overall understanding that ISO 22301 can be a very good, let's say, tool to do these things. Okay, very good. Now let's go for the agenda. And by the way, as I go through these items in the agenda, let me know through the chat if you want me to focus on any of these topics. And so if you want me to spend more time or more detailed explanation of any of these, then just send me a message and I'll try to spend more time. So I'll first go through this terminology, because there is very often confusion around what is the MTPD or RTO or RPO. So I'll explain these things in the beginning, and I'll also show you what are the exactly requirements of NIS2 and DORA when it comes to BIA. And then I'll show you where does this BIA fit in the overall business continuity management process. So BCM stands for Business Continuity Management. Then I'll show you what are the steps, 5 steps within BIA. So what exactly you have to do to do the BIA. And I'll also show you how you can actually determine this MTPD, maximum tolerable period of disruption. So I'll explain this in the next slide. Also RTO, also RPO. So I'll show you in a couple of examples when you use these business impact analysis questionnaires, and when you get the results, I'll show you actually how to determine these KPIs or these objectives. Maybe this is not really a KPI, these are more like objectives. Okay, very good. So yeah, let's move on to this slide about terminology. Okay, so BIA stands for Business Impact Analysis. MTPD stands for Maximum Tolerable Period of Disruption. Sometimes you will also see a term called MAO, which stands for Maximum Acceptable Outage. So MTPD and MAO have the same meaning. And basically this is where when you analyze a particular activity in your company or particular department in your company, and then once you, based on this analysis, once you perform business impact analysis, and then once you find out what is the longest period that your activity or department can be disrupted. So in some cases it might be, I don't know, 2 hours or 4 hours or 24 hours or a couple of days. And actually this differs from one activity or one department to another. So the point is that this is actually the, I would say, first conclusion from the business impact analysis. And in a couple of slides, I'll show you actually how to calculate this MTPD. Now, as opposed to MTPD, there is also this RTO. RTO is, I would say, not the first, but the second conclusion. And actually you calculate the RTO, recovery time objective, based on the MTPD. So first you have to calculate the MTPD, then you have to summarize the results of all the MTPDs for all the activities or all the departments in a company. And then once you get an overall picture and interdependencies between these departments, then you can finally decide on the RTOs. And I have a separate slide where I show you exactly a couple of examples with these MTPDs, interdependencies, and then how to actually reach the conclusion on the RTOs. And finally, RPO is a recovery point objective. It has nothing to do with RTO. So recovery time objective is basically the let's say, final decision on how quickly you need to recover a particular department or activity, whereas RPO, recovery point objective, is basically your decision on how often you want to do the backup. Okay, so recovery point objective basically it's also called maximum data loss. Again, these are the two same things. So basically it determines basically if you're doing, if you are creating some data as part of some data processing, how much can you afford to lose? So can you afford to lose the data that was created in the last, let's say 1 hour, or last couple of minutes, or last, let's say 1 day? And then this is used for determining the backup schedule. But I also have a separate slide for this, and I'll explain you this on a couple of examples. Okay, good. So we'll share now with you a couple of links where you can learn more. The first one is this article called Explanation of the Most Common Business Continuity Terms. This is an article on Advisor website. And you'll see the link now in the chat window. And just to explain this, so if you joined this webinar through Zoom, or if you joined this webinar through YouTube, then you'll be able to click these links and they will open right away in your browser. Now, if you joined this webinar through LinkedIn, then because of some internal limitations of LinkedIn, then you can't directly click these links. And the workaround for this is that you simply copy the URL and paste it into your browser, and this link will open then. All right, the second article that we'll send you now is this article about RTO and RPO, and the explanation what is the difference between these two. So you'll also see the link, and so you can open it to learn more. All right, let's move on to the next slide, and this is about what are the requirements of NIS2. So NIS2, just for you that are new in this, NIS2 is a directive from European Union directive, which specifies cybersecurity for critical infrastructure organizations. There are 18 sectors. I'm not going to go into this. There is a separate webinar which explains the basics of NIS2. But what I wanted to show you is when you open actually this NIS2 directive. Let me show you how this looks like. You actually have it on Advisor website. When you open it, it looks like this. And by the way, we'll send you also now the link to this NIS2 directive on Advisor website, and you can actually see the same thing that I'm looking at now. When you go for Article 21, Cybersecurity Risk Management Measures, here you will see in this paragraph here, when assessing the proportionality of these measures, due account shall be taken of the degree of the entity's exposure to risks, the entity size, and the likelihood and occurrence of incidents and their severity, including societal and economic impact. So it doesn't really mention directly business impact analysis, but it does, indicate that there should be some kind of an analysis, in-depth analysis of impact, okay, impact of incidents, right? So not directly, but indirectly. Now, going back to my presentation, I also wanted to show you there is this CIR. CIR stands for Commission Implementing Regulation, and there is this Commission CIR 2024-2690, which basically describes on how NIS2 needs to be implemented for digital infrastructure companies. So again, NIS2 applies for 18 sectors, and two of these sectors are related, 2 or 3 actually, sectors are related to digital companies. And for those companies that are digital companies, for them there are extra rules in terms of this CIR. So let's take a look at how this CIR looks like. Let me switch the screen. So here's this full text of CIR. You will see that there are several articles here, but the most important here is this annex which defines technical and methodological requirements. And here you will see that there are several requirements for the top level policy, roles, responsibilities, authorities, risk management, then incident handling, what you have to write in the incident handling policy, monitoring along it, and so on. So let me scroll further and find this section about business continuity. So this is 413. So business continuity disaster recovery plan, and then you have this one here. The relevant entities shall carry out a business impact analysis to assess the potential impact of severe disruptions to their business operations, and shall be based on the results of the business impact analysis establish continuity requirements for the network and information systems. So as you can see, it does mention specifically business impact analysis, but it doesn't say, you know, what this is, how to do it, anything like this. And, you know, when you go through the rest of this CIR, it doesn't, you know, tell you anything more. So, not, I would say, very helpful when it comes to implementation. Okay, let me go back to the presentation. I need to switch. Okay, good. And then since NIS2 is only a directive, which means it's a kind of a top level document which serves as a baseline for EU countries to publish their own laws and regulations. So NIS2 is not directly applicable to companies. However, based on NIS2, EU countries have to publish their own laws and regulations, which then are applicable directly to companies in their countries. So NIS2 is a baseline, and then you have details basically in the laws and regulations. And then each and every country in their laws and regulations should specify more rules. However, when you read these local rules, in most cases, they do not, again, tell you what business impact analysis is or how to do it. So again, you cannot really rely fully on basically these laws and regulations or anything, you know, let's say that is official. Which brings you then to the conclusion that you should use some other, I would say, methodology. And this methodology is through ISO 22301. And I'll come to this in a couple of minutes. Now, let me just share on Advisor website, you have this page called NIS2 Where to Start. And here, when you scroll down, you will actually see a section which speaks about transposition. Transposition basically means how how EU countries are actually publishing their own laws based on NIS2. And here you have these various articles which speak about the details. So if you want to learn more about what local laws and regulations are saying, then you can actually take a look at this, this particular page. Okay, going back to my presentation. Yeah, we'll also share with you another link called to an article called List of Required Documents According to NIS2. It's a useful article just for you to get a feeling on what is really needed and what is not needed when it comes to NIS2, which kind of documents you need. Okay, now let's move forward to DORA. So as opposed to NIS2, which is applicable to critical infrastructure companies, DORA is applicable to financial organizations in European Union. So banks, you know, insurance companies, brokerage houses, investment banks, I don't know, these various stock exchanges and so on. Now, let me switch the screen. In DORA, you have this Article 11, Paragraph 5, which is quite more detailed. Okay, so yeah, so here Article 11, and then we have Paragraph 5. So it's here. So it says, as part of the overall business continuity policy, financial entities shall conduct a business impact analysis of their exposures to several business disruptions. Under BIA, financial entities shall assess the potential impact of severe business disruptions by means of quantitative and qualitative criteria using internal and external data and scenario analysis as appropriate. The BIA shall consider the criticality of identified mapped business functions, support processes, third-party dependencies, and information assets and their interdependencies. Financial entities shall ensure that ICT assets and ICT services are designed and used in full alignment with the BIA, in particular with regard to adequately ensuring the redundancy of all critical components. So here you see much more precise, let's say, requirements on what DORA actually requires from BIA. However, again, it doesn't tell you how to do it. So again, you have more or less similar problems, but let me just kind of emphasize here. It says quantitative and qualitative criteria. It says internal and external data. It says scenario analysis, and then basically that you have identified and mapped the business function, support processes, third-party dependencies, information assets, and their interdependencies. So all of these things you should actually analyze during the business impact analysis. And basically then you should actually ensure that ICT, by the way, ICT stands for Information and Communication Technology. So that ICT assets and services are basically in full alignment with the BIA. So quite many requirements, but again, doesn't give you a clue on how to do it. All right, now besides this DORA, there are also these. There is also this CDR. CDR stands for Commission Delegated Regulation. So this is a regulatory technical standard which is published based on DORA, and their articles 24 in this CDR 1774. There are articles 24, 25, and 26. We'll just go through them very quickly because it doesn't really give you much more detail. But let's just move forward through this CDR. So 24. Okay. Let me actually search for a keyword impact. So it mentions here, considering the results of the business impact analysis. So not really useful. It's only kind of input, an input that is needed. So here in Article 25, again, take into account the financial entity's business impact analysis, but it doesn't really give you much more detail. 26, again, take into account the results of financial entities' business impact analysis. So Article 20, this CDR 2024 1774 does mention business impact analysis, doesn't give you detail, but it shows you where you need to use these results. Okay, so in the links, in the chat window, you have links towards these, towards DORA and towards this 1774. So if you want to read more in detail, you can find it there. And we'll also share now with you this link to this article called List of Documents Required by DORA. So if you want to study more what exactly do you need for compliance with DORA, you can take a look at this article. All right, now let's now see how do you actually implement the business impact analysis according to ISO 22301. So we are now switching to 22301 methodology just to show you how the whole thing works. Basically, there are kind of 5 core elements of business continuity according to 22301. The first one is this business continuity policy, which you actually have to write in order to define the main rules on how you will manage business continuity in your company. And by the way, business continuity policy is also mandatory according to DORA. NIS2 does not mention it, but DORA does. And yeah, so I'm not going to go today into the details of business continuity policy, but there is a link actually. There is an article on Advisor website where you can read more about this, and we'll share now the link for this article in the chat window. Yeah, so the article is called The Purpose of Business Continuity Policy according to ISO 22301. And then the second key element of business continuity is this analysis part. Now, analysis part has 2 elements. One is the business impact analysis, which I'll explain, of course, in details in the next slide. And the second part is risk assessment. Now, a risk assessment can be actually done according to, let's say, for cybersecurity, you can use one risk assessment for both business continuity and cybersecurity. You don't have to do it separately. And yeah, there is actually, I've done one video on YouTube where I explain how to do risk assessment according to ISO 27001, the information security standard, and you can take a look at this video, and it explains in much more detail on how risk assessment needs to be done. Again, this whole idea of using information security risk assessment for business continuity risk assessment is fine, and yeah, you can basically do it this way. So I'll come back to business impact analysis in the next slide, but let me just move forward and explain you what are these core elements. The next core element is this business continuity strategy. So once you have the results of business impact analysis, and these results are basically a list of resources you need for recovery, also the RTO, also the RPO, and from the risk assessment you basically see what are the main risks. Then you can actually create these scenarios, and then you can actually create a business continuity strategy. And the main purpose of the strategy is to define how you're going to recover, or basically which resources, which assets are needed for you to recover if an incident happens. Now, why is this needed? This is needed so that you can actually prepare all of those resources before an incident happens. Let's say that okay, you have a physical server. Let's say that you are not using a cloud, but let's say that you have a physical server. Now, if you do not prepare, let's say a backup server that will actually take over instead of this main server upfront, then you will not have the time to actually, I don't know, purchase and install this new server after the incident happens. So you have to do it before an incident, and this is exactly the purpose of the strategy, to find out exactly what you have to prepare upfront so that you are ready, okay? There is also a webinar that I deliver on business continuity strategy, and we'll share now with the link with you to if you want to join this webinar and see actually, I mean, take a look at the recording of this webinar just to learn more about business continuity strategy. Okay, then the next element are these plans. So business continuity disaster recovery plans, where you actually where you basically write what are the exact steps that you need to do to recover from a disruption. And of course, you write these plans based on the previous step, which was the writing the strategy. Because once you write the strategy, you will know exactly what resources are needed and which resources will be prepared up front, and then you can actually use these resources to recover. But the plans are actually here to define what exact steps are needed. And to learn more about this, you can take a look at this article called Business Continuity Plan, How to Structure It According to ISO 22301. And then the final element is this exercising and testing. And the idea here is that, you know, with business continuity, you can never do it actually right. I mean, you can never create a perfect strategy or perfect plans. There will always be something missing, because you never actually will be able to test it out properly, right? And this is why this exercising and testing is important, so that you actually simulate some disruptions, and that you actually find out when you try to recover from these simulated disruptions, what's actually not right in your plans. And then you actually correct your plans, improve them, and so on. So this is why exercising and testing is crucial. And yeah, we'll share also with you now this link to article called How to Perform Business Continuity Exercising and Testing According to ISO 22301. So as you can see, all of these 5 elements are connected. First, you have this top-level plan where you define the main rules. Then you do initial analysis, which feeds into creating the strategy. Once you create a strategy, it feeds into the plans. Once you have the plans, they basically feed into, or then you actually start doing exercising and testing on a regular basis. So if you didn't have any of these elements, business continuity wouldn't work. So this is the whole point here, and I wanted to show you what are these elements and how business impact analysis contributes to the whole thing. All right, now let's move more into detail of business impact analysis. So what are the steps actually for you to do the business impact analysis? There are basically five steps. First, you have to develop this methodology. So you have to set the rules on how you will do the business impact analysis. So are you going to analyze, I don't know, your departments or your activities or processes? So you define these things, who will be in charge, which kind of questionnaires you will be using, how will you calculate the RTOs, RPOs. So all of these things you have to specify in your methodology. And by the way, we'll also share with you now the link to an article called How to Implement Business Impact Analysis According to ISO 22301. And in that article, you will see all of these things that I'm speaking about now, you will see in more detail. All right, the next step is really to collect the data. And this collection of data is done through these BIA questionnaires. Okay. Later on, I'll show you how these questionnaires look like. But the point is that, let's say that you have, I don't know, 6 departments in your company, and then you have to collect the data from these departments about potential impacts and how these disruptions will negatively impact your processes. So you have to do these questionnaires to collect all of these data for each of these departments, right? And then once you have these, this data, then you actually start calculating this MTPD, RTO, and RPO. And then again, I'll show you this in another slide, how to calculate this. Then the fourth step is for you to write a business impact analysis report. However, this is not needed. Some companies write this report, some companies don't. It's really up to each company. But what is needed is that you actually incorporate these results, primarily the, again, list of assets, RTOs, RPOs, into the business continuity strategy. So this is something that certainly is required according to ISO 22301. Okay, now we'll share with you this article which speaks about mandatory documents for ISO 22301. And yeah, just for you to get a feeling on what kind of documentation is needed if you want to comply with this business continuity standard. Okay, now let's go to the most interesting part, and this is how to calculate this MTPD, or maximum tolerable period of disruption. So let's say that you, okay, I have a question from Roger. So all departments have to be involved. What about companies where some activities performed not in Europe, for example, headquarters in the US? So ISO 22301 allows you not to include all the departments in business impact analysis or business continuity in general. So you can actually select the scope, which only focuses on a couple of departments. Now, when it comes to NIS2, as you've seen, it's not specific. It doesn't really tell you much more about the business impact analysis. This CIR does. DORA says a little bit more about the business impact analysis, but I would say, so it doesn't say where you have to, focus on only one, let's say, department or several or all departments, but from the language that I'm seeing in this CIR and DORA, basically you would have to do it in your whole company, okay? Now, since DORA and NIS2 are applicable only in the European Union, if there is a, let's say, headquarters in the US and you have, let's say, a daughter company in, for example, Germany, then I would say that all the departments within the German company would have to be compliant with whether DORA or NIS2. This depends on what type of a company this is, right? So in this case, I wouldn't say that US headquarters would have to do the BIA or anything like this. All right, this was a very, very good question. Thank you for this. Good. Now let me show you what is one way to calculate this MTPD. So as you can see here on the screen, there are these qualitative questions and quantitative questions. If you remember from a requirement from DORA, it requires you actually to do a qualitative and quantitative based on internal and external data. Okay, and this is one way you could do it. So, for example, you could have these qualitative questions. How will your clients react to disruption? What will be the impact to other activities in a company? How will disruption influence the loss of reputation? How difficult will it be to catch up on the backlog of work? Obviously, these are qualitative questions. By the way, these are only suggestions. These are not specified in the standards. You can actually select your own questions. And then, since this is a qualitative one, then you have actually assessment scale. Let's say 1 would mean marginal impact, 2 acceptable impact, 3 high impact, and 4 catastrophic impact. And then you have to assess the impact throughout time. So if there is a disruption of 2 hours, what is the impact? If there is a disruption of 4 hours, impact 8 hours, 24, 48 hours, 1 week. And then you will see that the longer the disruption, of course, the impact will be higher, because the longer you're not operating, the bigger problems will come out of it. And then, for example, how will your clients react to disruption? Okay, so after 2 hours, they will probably, be a little bit unhappy, but nothing catastrophic, right? Also after 4 hours. But let's say after a full 8 hours, this is almost the whole day, they will be very unsatisfied. So the high impact will be here. And then also after 24 hours, after 2 days, this might be catastrophic. You might see already a big churn. Many companies, actually, many clients leaving and stop using your services. So again, this will depend on a specific department within your company. This is again only a hypothetical analysis. You will probably have very different numbers here for each of these time slots for particular disruption duration. What will be the impact to other activities? After 2 hours, negligent. After 4 hours, 8 hours, acceptable. After 24 hours, a problem, right? How will the disruption influence the loss of reputation? Okay, so basically here you have at 4 hours, at 48 hours you have a problem, and so on and so forth. So this is how it works, right? You assign the gravity, I would say, of the impact depending on the duration of this disruption. Of course, you will get this impact, you will collect this impact from these departments by speaking to probably the head of these departments within your company. Now, when it comes to quantitative, you will have different questions, obviously. How much will the legal and contractual penalties cost, right? And then you need to have some currency. Okay, you can use the euro or dollar or whatever. So after 2 hours, nothing, but after 4 hours, let's say that you will have to pay, I don't know, $1,000 of some, I don't know, penalty or something like this. Okay. 2,000, 30,000, let's say after 24 hours and so on. How much will repair expenses be? Again, after 2 hours, 4 hours, maybe nothing, but let's say after 8 hours, it might be 5,000. How much revenue will you lose, right? And let's say that you won't start losing anything within 24 hours, but after 24 hours, you will start losing. So this is how you actually do the quantitative part of business impact analysis. And now comes the hard part, or the fun part, depending on how much you enjoy this exercise. And this is basically that you calculate the MTPD. So what is the maximum tolerable period of disruption? And in this case, it might be something like this. So I've drawn a red line where basically on the left-hand side would be acceptable, on the right-hand side would be not acceptable. As you can see, in this qualitative part here, maybe on the left hand side mainly are these 2s, right? Only 1, 3. So okay, you can't make this perfect, but let's say that most here are 1s and 2s, which means that this is probably acceptable. On the right hand side you see there are mostly 3s and 4s, which is not acceptable. So therefore probably this MTPD is somewhere between 8 and 24 hours. Okay. Similar thing in the money terms. On the left hand side you see these 1,000, 2,000, 5,000. Okay, this will still not kill a company. However, if this is a smaller company, like 30,000 or 60,000, especially 200,000, might actually kill a company. So this is why this is not acceptable. So this is how you actually analyze this, more or less in a visual way. And then you actually conclude, look, our MTPD is somewhere between 8 and 24 hours. And then you discuss a little bit more in detail with the head of the department, and then you might actually settle on, let's say, 16 hours or 20 hours or something like this. So for that purpose, you will need to discuss this further with this person. So there you go. This is how you calculate the MTPD. In a couple of slides, I'll show you how to use this MTPD to come to an RTO. Okay, now how do you determine the RPO? So recovery point objective. If you remember, this is about how much data you can afford to lose. And what you collect actually during your business impact analysis, in your business impact analysis questionnaire, is how much data you can afford to lose for each database or for each application or for each, let's say, media that you have. So for software, I don't know, some software that you're using, 2 hours, 4 hours, 8 hours, it's fine. It's after 24 hours, if you lose 24 hours of the data you created in the software, then the assessment here is that the impact will be high. Software 2 is a little bit more critical. As you can see, the impact is higher if you lose data. For some database here, the impact is already high after 2 hours, so it's catastrophic actually. And paper-based documents, let's say that some higher impact is only after 1 week. So what does this mean in terms of RPO? This means, let me just put it here. So this means that for this software number 1, RPO is probably around 24 hours, okay? RPO for software number 2 is probably around, I don't know, 6 hours, maybe even 4 hours. For this database, the RPO is less than 2 hours. It can actually be 0, right? So for example, in banks, if you're dealing with, financial transactions, banks cannot afford to lose a single transaction, let alone 1 hour of transactions, which might be, I don't know, hundreds of thousands of transactions in 1 hour, right? So basically for banks and for these critical applications, RPO is usually 0. And then some paper-based documents, okay, you can afford to lose, let's say, papers that you created maybe for a full week. Why? Usually you can recreate them through some other sources. Now, how does this impact your backup policy? This determines exactly the frequency of the backup. So for software number 1, you will have to do the backup at least every 24 hours, right? Because again, if you lose the data within 24 hours that you didn't do, the last 24 hours when you didn't do the backup, this will still be acceptable, but you have to do it at least every 24 hours so that the maximum data loss is 24 hours. Software number 2, you will have to do the backup probably every 4 hours. For database, this database here, you'll probably have to do the backup in real time, not to lose a single data. And for paper-based documents, you can probably do the backup every, let's say, 1 week. Okay, so this determines directly your backup frequency. All right, now let's move on to the next slide, and this is around how you determine these interdependencies, and then based on that calculate the RTO. So let's say that you, just for example, let's say that you have only 3 departments in a company: HR department, IT department, and some just-in-time production. So let's say that you're a manufacturing company. Now for HR department depends, for its recovery, it depends on IT department, okay? It doesn't depend on anyone else, it depends only on the IT department for a recovery. IT department does not depend on anyone. It's simply, let's say, it depends only on itself for recovery, and this just-in-time production depends also on IT department for recovery. Now, MTPD for HR department was calculated, determined as 5 days through the BIA questionnaires. IT department MTPD was determined as 8 hours, and just-in-time production was determined as 2 hours. So if you notice here, the recovery, so MTPD for HR department is 5 days, because usually you don't have to recover HR department very quickly if a disruption occurs. However, for this particular company, obviously for them this just-in-time production is very important, so they want to recover it within 2 hours. Now, where's the problem? The problem is that they want to recover it within 2 hours. However, they depend on IT department to do this. Now, if IT department recovers within 8 hours, these guys will not make it in 2 hours, right? So this means that actually the for IT department, the RTO needs to be smaller than this MTPD. It needs to be 2 hours. Why? because they actually have to recover so that they can help the just-in-time production to recover as well. I might even argue that the RTO for IT department is not 2 hours, probably 1 hour, so that once they recover, they still have 1 full hour to help just-in-time production to recover as well. So as you can see, just-in-time production MTPD is 2 hours, RTO is 2 hours, because basically no one depends on them. For IT departments, MTPD is 8 hours, however RTO is shorter because of this just-in-time production, whereas for HR department it's 5 days because no one depends on them. So this is the way actually to assess these interdependencies and to decide on final RTOs for each department in your company. Okay, so I hope that I managed to explain all of these things. Now let me actually show you how you can use a couple of tools to do all of these things. So what I'll be showing you is this NIS2 documentation toolkit that we developed here in 𝗹𝗲𝗴𝗲, and basically this toolkit provides you with all the documents that you need to comply with NIS2, but also with these local laws and regulations that are published in each country. I'm showing you the version in English, but of course there are some other versions for other countries. For example, let me show you. Yeah, this one is in Croatian, this one is in Italian, this one is in French for Belgium market, this one is in Dutch for Belgium market, and so on. So, but let me go for this business continuity folder. Here you have this business impact analysis methodology, and here you have this business impact analysis questionnaire. Now, I already downloaded this business impact analysis questionnaire. Let me show you just briefly how this looks like. Okay, so it's like this. So here in this part 1 of this business impact analysis, you actually have these questions around for quantitative. Let me actually show you in a different view. You have these qualitative questions, and you also have these quantitative questions when you want to actually collect this data. And then in part 2, there are already many other questions which serve you to collect the information about the assets that are needed for recovery, the databases that you're using, interdependencies, and so on and so forth. So basically this is how this looks like. Also, going back to the toolkits, what you can use is this when you have a Word document like business impact analysis. It actually helps you fill out the document in a much quicker way. So it takes you actually through this wizard. So what is the name of the person to approve this document? Some person. And then what is the confidentiality level? Job title of the person in charge of managing business continuity. It could be, let's say it's not business continuity coordinator. Let's say this is, I don't know. Let's say the CISO is actually in charge of managing business continuity, and so on. So you basically fill this out, and then you download this document, and it will come out rather quickly. I'll open this now and show you how this looks like. So basically then you actually download to your local disk this particular document, in this case business impact analysis, which is already personalized for your company. So it inserts the logo, the company name. As you can see, all of these things that I entered through the wizard are also here. So name, the confidentiality level, and you also see the full text of the document here. So business impact analysis is implemented through questionnaire. It's coordinated by CISO. This is also what I entered through the wizard. And here on the right hand side you have these comments which actually help you fill out the document or personalize this document further. So for example, you can find this business continuity strategy in the folder this and that, and so on. So basically the idea of these templates is that once you download them on or your local disk, it's very easy, very quick for you actually to fill out everything that is needed in this case for NIS2. Same thing for DORA. So I can switch to DORA just for you to see how this looks like. Again, there are a set of folders. Each folder has several documents. When I go for business continuity, you can actually see several documents here. Actually, for DORA, we made this business impact analysis part of this folder 6. And here you have business impact analysis methodology and questionnaire. Okay, I don't want to take much more of your time. I just wanted to show you that these tools exist if you want to speed the things up, and we've sent you also the links to these toolkits so that you can study them in more further. You can actually also sign up for a free trial. So if you want to test how these documents work, how they look like, you can actually sign up for a free trial, and then you can download a demo version of these documents directly from this application that I was showing. Okay, good. Now let me move forward with the presentation. Basically, let me make a conclusion, and then I'll go for the Q&A session. So I would say that, you know, this kind of a well-known standard like ISO 22301 can be used very nicely for business impact analysis, and you can actually speed up the things, the whole process considerably if you follow up on this kind of a methodology, which is already, I would say, worldwide and known. And of course, for that purpose, we can help you with these NIS2 and DORA toolkits, and as I mentioned earlier, you can also sign up for a free trial, and you can also schedule a call with our toolkit expert, and he will show you actually the documents, the full documents, if you're interested in this, and we'll share now this link with our expert so that you can actually schedule a demo call. Okay, great. So let's move on to the Q&A session. Okay, so I'll start answering your questions now. So if you have any questions, please send them through this Q&A pane, also through the chat window. And while you're sending these questions, let me just go through a couple of announcements here. So first, feel free to reach out to me directly if you have any questions, and you will see my email on the screen now. So if you want, you can send me email. And the second thing, you can follow me on LinkedIn and YouTube. And on YouTube, I publish lots of videos around NIS2 and DORA. And if you want to learn in this video format, then you can take a look at my YouTube channel. And on LinkedIn, I regularly publish news from this cybersecurity and compliance world. So if you want to stay up to date, then you can follow me on LinkedIn. And I'm also hosting this Secure and Simple podcast. So this podcast is actually intended for consultants. So if you're a consultant, take a look at this podcast, because this is where I interview other successful consultants, and you can learn a lot from them, you know, on how to become a consultant, how to become successful consultant yourself. And there are actually a couple of interviews which speak about NIS2 and DORA, so you can learn in specific about these topics there. Okay, there was one question that I received before the webinar, so let me go through this question first. So the question was, how do we get business leaders to understand the importance of regular training on business continuity management and related potential security incidents? Okay, so there I would say two ways that you should approach this, and I mean you should use both of these ways. So they, I would say, work together, so to say. The first one is that both NIS2 and DORA emphasize that training and awareness is mandatory, and it's not mandatory for only some employees. It's actually mandatory for all the employees, including the senior management. So both NIS2 and DORA are very specific on that part. All of you have to go through this training, and of course, since business continuity is an important element of NIS2 and an important element of DORA, you actually have to include a training for NIS2 and DORA as well in your training program. So this is one way, basically, because of the requirements. The second way is to, I would say, explain to your senior management that you will actually reduce the costs if these people go for training. And you will reduce the cost in, I would say, two ways. The first one is that if the people are trained, they will execute these tasks in a more efficient way. if they know what they're doing, then they will do it much more quickly, as opposed to when they don't know what they're doing and if they don't really know what this is about. And the second thing is that basically the idea here is that you can actually explain to them why this cybersecurity and business continuity is needed. So you're actually going to reduce this, I would say, resistance towards these topics, and therefore they will do it more willingly. So these are kind of, let's say, a couple of things that will actually help you when you want to explain these topics to your senior management. And of course, you know, a good training and awareness will probably reduce the chances of some incidents happening, even though it's hard to quantify and to present this to your senior management. And when thinking about any kind of DORA or NIS2 training and awareness, you can also take a look at the product, another product that we developed. This is called Company Training Academy. And you will see there lots of videos that we already recorded around NIS2 and DORA and security awareness training, and some other frameworks like GDPR 27001 and so on, so that you can use them actually to train your own employees. And we'll send you now, you actually have this link now in the chat window for this Company Training Academy. Good, now let me see if there are any other questions coming in. Okay, if not, then let me wrap up the webinar. So just a few words before we finish. So as I mentioned, you know, in this 1 hour webinar, I didn't really want to go too much into detail of overall business continuity. I wanted to focus primarily on business impact analysis, and I hope that I managed to explain you this how this whole thing works and how to calculate these MTPDs, RTOs, RPOs, and other things. And of course, if you want to check out the details, you can sign up for these tools that I've shown you. And regarding the PDF presentation deck, so as I mentioned, you can actually download this PDF presentation deck, and we'll send you the links. We'll actually publish the links. So if you join the webinar on YouTube or LinkedIn, then you should wait about 10 minutes on the same page where you're watching the webinar now. And then we'll publish in the comment section, we'll publish the link for you to actually download this PDF presentation deck. So this is something that you can do in about 10 minutes from now. And if you joined the webinar through Zoom, then you'll be able to, you'll actually receive the link to download this presentation deck through email. And we'll publish not only the link for this presentation deck, we'll also publish all the links that we distributed in today's webinar. So if you didn't manage to copy all of these, you'll be able actually to download them simply by going for these, by actually taking a look at these comments on YouTube or LinkedIn. And again, if you joined through Zoom, then you will simply have this in your email. And we'll also send you a link to a short survey. It's very short, 3 questions, and if you fill out, I will be grateful, because it gives me feedback on how well I'm doing in this, how well I was doing in this webinar. And this will be all. Thank you very much for your participation, and I hope you have enjoyed this webinar. Have a nice day.